Welcome to the Paveya podcast, everybody. I'm Chris, and thanks for joining us here this week. Today we're going to talk to our guest, writer Debra Borchardt, about online real estate sales as Trulia and Zillow get ready to showdown on Wall Street. Before we get to that, just a quick reminder, we're going to be launching a brand new website, and we feature some custom packages just for real estate web design and marketing. So if you're one of those people who listen to the podcast and you get some good tips and advice from our guest and from myself, but you don't exactly know how to implement them, our owner's been in real estate for over 20 years, and we're just now getting into this marketing and really expanding. So we're here to help if you need us, whether by a free podcast or a more professional approach. You can visit us at paveya.com, email us at info@paveya.com, and just let us know how we can help out. Okay, let's bring our guest now. Shameless self-promotion is over. She is a contributing writer from The Street. Here to talk about Trulia vs. Zillow is Debra Borchardt. And hi, Debra. Thank you so much for being here, and it's always good to hear from our friends at The Street again.
Yes, thank you for having me.
Well, I'll tell you, before we get into this article, which is why I wanted to have you on, let's get a little bit of background on yourself. Tell us how you started writing for The Street.
Well, actually, I had a background in the securities business and worked in the securities business for about 20 years, my latest job being at Bear Stearns. And I've always loved the market, loved following the market. And, the securities business has changed a lot, and I found that I was not enjoying it as much being, inside the business, and decided to start to cover it. So I went back to school, got my master's degree in business and economic reporting, and lo and behold, ended up at The Street, which is one of the few independent financial websites out there in the internet, and we're not owned by any kind of big corporate giant or anything that kind of watches over what you're doing. So we have a pretty fair amount of independence and freedom, and that's kind of nice.
I know you're out in New York. We talked to Rocco, who's on the West Coast, who contributes with The Street as well, and I asked him about Jim Cramer and is he as wound up as he appears, and I guess I'll kind of ask you, what has your experience been with Jim so far?
Well, that's true. I work with Jim every day, and I have so much respect for him. He is really brilliant when it comes to stocks. You can pretty much throw out any stock at him. He'll be honest. He'll say, yeah, I know that one, or no, I don't know it. But, it's amazing the command of knowledge he has on the number of stocks that are out there. And he's just got such a great mind when it comes to stocks. And he's not like, the show, and it's kind of amusing and he tells me this all the time. He's like, Mad Money is entertainment. And that's what it is. It's entertainment, and he knows that, and the people that produce the show know that. And that's why there's the bells and the whistles, and it's very kind of, AM radio kind of stuff, And when you see him on CNBC in the morning, now, he's kind of anchoring in the morning, it's a totally different Kramer because that's not the kind of show, and that's not really the audience he's going after. Mad Money is really going after tends to be a college-age audience and also an independent trading audience. So definitely not like that at the office.
I'll tell you, no matter what he's doing, he comes across it as genuine, and you can really tell people who enjoy what they do and people who don't, and he's one of those people that you can just tell he has a ball with it. I will say this, though, you need to tell him this, since we're both Phillies fans, and I've given him all kinds of free promotion now with The Street here. This is the second time on the podcast. If they make the playoffs, I should see some Phillies tickets in the mail.
I'm sure he wishes he had them. He definitely is a huge fan of the Pennsylvania sports teams, and he's always, wringing his hands over them, that's for sure.
All right, well, that's enough of that. Let's get into the real stuff now. I wanted to have you on because you wrote a pretty interesting article. A lot of our clients are real estate professionals, and Trulia and Zillow. You titled it The Battle for Online Real Estate, but it seems like you're saying that the battle is going to be won on Wall Street. Is that fair?
Right, and really, in my opinion, the battle is already won, and it's by Zillow. Zillow is already the largest online real estate company, and Trulia really is the second, but it's so far below what Zillow is already. Zillow, and in fact, Zillow is already at a profit-making stage at this point, whereas Trulia is not, and in fact has never made any money. So they've really got a long way to go, and as you know, first to market always does way better than the second to market. And so Trulia, not saying that they can't eventually become a profitable company, it's going to be a really hard road for them to get there.
Well, you mentioned in the article that the market may not react as strong to Trulia because of the Facebook effect. So tell us what you meant by that.
Well, ever since Facebook went public, people have been very skeptical about online companies going public. They feel that, they're overpriced, that they're not profitable, that you're buying into a hope and a dream, and that might not bear itself out. Now, we have seen companies that have slowly started to turn around, like a Pandora. Here's a web company not making money when it went public. Now it's starting to get very close to that point. Zillow, it was not making money when it went public, but since then has gotten into a profitable stage. So, and actually Facebook just started to take off in the last couple of days. But people felt like expectations were built very high for some of these companies, and people feel like they are kind of getting ripped off, that it's the internet boom all over again.
Yeah, and I was going to...
There's a lot of skepticism.
Sorry, I was just going to bring up that exact point, how much of it goes back to that. But isn't Trulia, give us your opinion here, I feel like they're in a better position in investors' minds than in Facebook. Now, you know more than I do, so you tell me.
My problem with Trulia is that I feel like the reason for them to go public is because they had a lawsuit that they lost that had to do with their search engine. And they lost this suit. They settled, which ultimately, when you settle and you have to pay out a big sum of money, that means you lost. And they owe a payment of $350,000, and they owe it now. And so, in my opinion, that's one of the big reasons why they're going public, is to come up with the money to pay this settlement. So I kind of feel like if they'd have never had that, then it's possible that maybe they wouldn't have. And I believe I had seen something, too, that I think Zillow was also going to file a lawsuit against them, too, for the, I think they feel like, Zillow has a home value estimate called I think it's called the Zestimate, and I think that I had seen that they were going to file a lawsuit against Trulia for taking their idea.
Right.
Now, to be fair, there are other websites like Property Shark and I believe Easy Street, and they all do home price valuations, estimates. So I think it'd be a little tough for them to claim, but they're certainly going to protect their turf, and that's what I think that they may be doing.
Now, it seems like they're pretty much both the same services. And how does Wall Street react to something like that? I mean, McDonald's and Burger King offer the same basic items, but, they're still competitors. So how will Wall Street, do you think, react?
You're right. It's a similar model. They have subscriptions that they sell to real estate agents, and then they also have basic banner ads. But everybody knows banner ads really don't pay off that well. So it's all about the subscription. And so far from what I've seen, the one good thing about Trulia is it's saying that it has better leads, that it gives the real estate agents that subscribe to it better leads than Zillow does. So if they're able to do that, then that, will help them out. It's a pretty good model, subscription-wise, because it's steady. I believe Trulia has now increased that subscription to, I think, a year. I think originally it was more month to month, and they realized that was hurting them. So they're trying to get them to convert to the subscription if they aren't already, and if they are, keep them into a longer subscription, so make it a little bit more sticky. And that's always good. Wall Street loves to see steady revenue.
I know you ended the article by saying it's probably best to wait on Trulia until you see profits there, obviously for good reason. The article was written about a month ago, which isn't a lot of time, but is there any updates, anything that's kind of swayed you or changed things? It doesn't seem like it, but
No, not really. Trulia, their average revenue per user has been increasing. It's up 56%, so that's good. But it's still, and it's called ARPU, average revenue per user, is $148. But Zillow's $288. So that's a huge difference. They're having to discount. They could maybe improve their pricing, maybe raise the prices. That could help them. But, I think they're just always going to be the second run. And I think, maybe what Trulia will have to do, maybe when it gets this offering off the ground, assuming it gets off the ground, that maybe they go out and make acquisitions. So maybe they see somebody like a Property Shark or G Street and pick that up and start to build up a more worthy foe for Zillow. And I think that's probably what you'll start to see then is a land grab for online real estate with these two competitors. It's going to be Pepsi and Coke, but instead of Zillow and Trulia.
right. Hopefully no new Trulia or new Zillow or any kind of strategies like that. Before we let you go, Debra, again, let everybody know where they can find the street and they can find your articles.
Sure, you can go online to thestreet.com. It's THESTREET.com. We are there. I do a lot of videos. I do mostly articles on the IPO world, and my Twitter handle, I tweet is Wall and Broad. All one word, Wall and Broad.
All right, Debra. Well, I appreciate you giving us some of your time. I know a lot of people in the real estate industry are kind of watching this, and thanks a lot for the insight.
All right, thanks for having me on.
All right, that was Debra Borchardt, everybody, from The Street. Go check out thestreet.com. That's going to do it for another podcast. We'll talk to you again next week. Have a great weekend.